Forget everything you think you know about the US dollar. Forget the textbooks, forget the so-called experts. Forget the comfort you felt in holding those green bills. Because what's happening right now isn't just another economic cycle. It's a historic shift, a slow-motion unraveling of what has been the world's most powerful currency for decades. This week, analysts are sounding alarms that the dollar is losing power at a speed few anticipated. And yet mainstream media is brushing it off as temporary fluctuations or market corrections. Don't be fooled. This is not temporary. The dollar is more than just a currency. It's been the backbone of the global financial system for over 50 years. It's what the world trades in, what nations store in their reserves, what oil, commodities, and even digital assets are measured against. When the dollar is strong, markets feel secure. When it falters, the tremors are felt globally. And right now, those tremors are growing. You might be wondering, how could the dollar, the symbol of stability, the most widely held reserve currency, suddenly be losing influence? After all, the Federal Reserve is raising rates, printing less money, and trying to stabilize inflation. By the old rules, the dollar should be stronger, not weaker. Yet it isn't. The reason lies deeper than monetary policy, deeper than inflation reports or GDP numbers. It's about trust, and trust is what the dollar is losing fastest. Look at the global stage. Over the last year, nations that once relied on the dollar for trade are quietly diversifying. China has been converting portions of its massive U.S. Treasury holdings into gold and yuan-based transactions. Russia has done the same, leaving dollars behind after sanctions cut them out of Western systems. Even countries in Europe, the Middle East, and Asia are exploring alternatives, creating swap lines and using their own currencies more in trade. This isn't speculation. These are real moves happening right now, and they're accelerating. History teaches us that no currency lasts forever. Every great empire, every global hegemon eventually sees its money weaken, its influence diminish. The British pound, once the unshakable pillar of the 19th century, lost its dominance to the dollar. Now, the dollar itself is facing challenges that could reshape the financial world for decades to come. And the warning signs are everywhere if you know where to look. Global debt is at record highs. The U.S. national debt has surpassed $35 trillion, growing faster than the economy can realistically sustain. Inflation-adjusted wages are stagnating. The purchasing power of ordinary citizens is declining, while the government's promises grow ever more fragile. Meanwhile, the Federal Reserve continues to manipulate interest rates and balance sheets to stabilize the economy. But these efforts are merely buying time, not solving the underlying problem. Because the real issue isn't a short-term market adjustment, it's a structural loss of faith in the dollar itself. And that's why, even as interest rates rise and markets wobble, the dollar is showing cracks. It's why investors are flocking to gold, cryptocurrencies, and alternative currencies. It's why foreign nations are quietly reducing their exposure to U.S. treasuries. The question you need to ask yourself isn't, will the dollar drop? It's how much will it drop before the world catches on? By the end of this video, you'll understand the full story, the forces, the history, and the decisions that are quietly eroding the dollar's power. You'll see why this isn't just about finance. It's about trust, survival, and the next generation of money.
The global shift. Dollar alternatives rising. Now, let's zoom out and take a look at the bigger picture. The dollar isn't just a piece of green paper. It's a global measurement of trust. And trust, once lost, is almost impossible to regain. Over the last few years, a quiet but massive reallocation of global reserves has been underway. Central banks, sovereign wealth funds, and even multinational corporations are starting to reduce their dependence on the dollar. This is happening for one reason. They no longer want to be tied to a currency whose value is controlled by a single nation, no matter how powerful. Take China, for example. It holds trillions in U.S. treasuries, but has been selling some of them off and simultaneously increasing its gold reserves. It's also settling trade deals in yuan instead of dollars, a strategy designed to wean its economy off the greenback. This isn't just about economics, it's about geopolitical leverage. Russia is doing something similar. After being cut off from SWIFT and facing sanctions, it doubled down on gold, digital ruble initiatives, and bilateral trade in non-dollar currencies. The lesson is clear. When nations feel vulnerable, they seek assets beyond the reach of Washington's control. Even smaller economies are joining the trend. Turkey, India, Brazil, and South Africa, part of the BRICS bloc, have all quietly increased their gold reserves while reducing dollar exposure. Their goal is simple: protect themselves from volatility and external political pressure. But it's not just central banks. Corporations are hedging too. Multinationals with global supply chains are increasingly using alternative currencies for trade to mitigate the risk of dollar fluctuations. And investors? Ordinary people worldwide are waking up, converting portions of their savings into gold, cryptocurrencies, and foreign currencies. This is a fundamental shift in the rules of global finance. For decades, the US dollar reigned supreme, practically untouchable. But now, cracks are appearing. The dollar's dominance is no longer guaranteed, and these cracks are widening faster than most people realize. Let's talk numbers. The IMF reports that the dollar still makes up around 59% of global foreign exchange reserves, but that's down from 71% 2 decades ago. Meanwhile, the euro, the yuan, and even cryptocurrencies are gaining a foothold. On top of that, global debt denominated in dollars continues to climb, which increases the risk of default or devaluation. All of this is creating a perfect storm. A world that once trusted the dollar implicitly is starting to question its reliability. And when that trust falters, the ripple effects extend far beyond Wall Street. They hit Main Street, your savings, and your future. And here's where the story becomes personal. Because the dollar's decline isn't just a headline for economists. It's a warning for everyone who holds cash, who invests in dollar-denominated assets, or who assumes that the currency's value is eternal. So what does this mean for you? It means paying attention to what the world's biggest players are doing and understanding why they are quietly moving away from the dollar. Gold is rising. Cryptocurrencies are gaining legitimacy. Alternative currencies are increasingly being accepted in trade. And all of this points to a rebalancing of global power, a slow but undeniable shift. The dollar isn't collapsing tomorrow, but it is losing its grip. And every day, as nations, banks, and investors diversify away from it, the foundation of what we've known as safe money becomes less stable. In the next section, we'll examine the forces inside the U.S. that are accelerating this decline, from national debt to fiscal policy mistakes, and how the government's own actions may be contributing to the weakening of the dollar. The U.S. factor: debt, deficits, and dollar fragility. Now let's bring the focus closer to home. The story of the dollar's decline isn't just about what other nations are doing. It's about what's happening inside the United States itself. And the signs are as clear as they are alarming. The U.S. national debt has surpassed $35 trillion. To put that into perspective, that's more than the total GDP of the country, and it's growing faster than the economy can realistically sustain. Every year, trillions of dollars are borrowed just to keep the government running, and this debt isn't just numbers on a screen, it's a burden on future generations. Meanwhile, the federal deficit continues to expand. The government spends far more than it collects in revenue, relying on borrowed money to patch the gaps. And who holds that debt? The Federal Reserve, foreign governments, institutional investors. all of whom are watching closely and questioning how sustainable this system really is. When governments owe more than they can repay, history shows us that there are only two outcomes: default or inflation. And the U.S. has never defaulted on its debt. Instead, it chooses the second option, printing more money. The result? A slow but steady erosion of the dollar's purchasing power.
You can see it in everyday life. Prices of groceries, gas, housing, everything seems to climb higher, even as wages stagnate. And while interest rate hikes may temporarily slow inflation, they cannot fix the underlying problem: the sheer volume of debt and the trust deficit it creates. The Federal Reserve is caught in a balancing act that may no longer be controllable. Raising interest rates can strengthen the dollar, but it can also slow growth, increase unemployment, and risk a recession. Lowering rates stimulates the economy, but it weakens the currency further. And with debt levels at historic highs, there's very little room left for maneuver. Meanwhile, political gridlock and partisan debates make decisive action nearly impossible. Tax reforms, spending cuts, or long-term fiscal planning are constantly delayed or watered down. And every delay chips away at confidence, not just in the US dollar, but in the government's ability to manage its finances effectively. The consequences of this fragility are already showing globally. When foreign investors start questioning the dollar's reliability, they demand higher yields to hold US debt, which increases borrowing costs for the government. They may reduce exposure entirely, seeking safer alternatives. And as they do, the dollar's influence begins to wane, a self-reinforcing cycle that few are prepared for. Even worse, the rise of alternative currencies and gold is accelerating the pressure. The more the world diversifies away from the dollar, the more the US must rely on domestic demand and foreign appetite for its debt to maintain value. And history shows us that confidence in a currency is fragile. Once it starts to erode, recovery is extremely difficult. Think of the dollar like a ship. For decades, it sailed through calm waters, its dominance unquestioned. But cracks are appearing in the hull. Debt is rising like water in the hold. Political dysfunction threatens the engine, and global competitors are circling like storm clouds. The longer the ship sails without repairs, the more precarious its position becomes. And here's the reality. Ordinary people may not see the cracks yet, but they feel them in their wallets. Inflation, rising interest rates, and the cost of living are early warning signs. And if the dollar continues to weaken, those impacts will only grow stronger, affecting everything from savings to retirement plans, from mortgages to imports. But it's not all doom and gloom. Understanding the problem is the first step toward protection. Awareness, diversification, and strategic planning are key. This isn't a moment to panic, it's a moment to prepare and adapt. In the next section, we'll explore what this means for your money, your investments, and your financial future, and why the global shift away from the dollar might actually be an opportunity for those who act wisely. The future of money, what you need to know. Now, let's step back and take a moment to see the bigger picture. The dollar's decline isn't just an economic story. It's a story about trust, power, and the shifting balance of global influence. And it affects every single person holding dollars, earning wages, investing, or saving for the future. The world is quietly diversifying away from the dollar. Gold, once considered outdated by many, is experiencing a renaissance. Cryptocurrencies are gaining legitimacy. Alternative currencies and digital payment systems are being developed and adopted faster than anyone expected. Even multinational corporations are settling trade deals without relying on the dollar. This isn't speculation. It's happening right now in real time in boardrooms, central banks, and global markets. The signals are clear. The dollar's dominance is no longer guaranteed, and those who ignore the warning signs may face consequences in the years to come. But here's the good news. Knowledge is power. By understanding the forces at work, you can protect yourself and even find opportunities. Diversification, Investing in tangible assets like gold, considering alternative currencies, and staying informed about global trends are all ways to stay ahead of the curve. Think of it like a storm. The dollar may not collapse tomorrow, but the winds are changing. Those who prepare now won't just survive, they'll be in a position to thrive. And here's the most important point. This is bigger than finance. This is about seeing through the noise, understanding the real story, and making decisions that safeguard your wealth and your future. Every headline, every chart, every policy decision is a piece of a puzzle. And when you start connecting the dots, a pattern emerges, a global shift that's reshaping money as we know it. So what should you do next? Start by paying attention, learning continuously, and diversifying intelligently. Watch how central banks act. Watch how global investors move. Understand that the dollar is no longer untouchable. It's a force in flux, influenced by debt, trust, and geopolitical power. And most importantly, don't wait for the panic to hit the headlines. Be proactive, be informed, and protect what you've worked so hard to earn. If this video helped you see the bigger picture, there's more to explore. Subscribe to Finance Lens to stay ahead of the global financial shifts. Like this video if it gave you clarity on the dollar's future. Comment below, do you think the dollar will maintain its dominance, or are we entering a new era of money? And share this video with friends and family so they can see the truth before it's too late. Because the dollar may be losing power, but knowledge, insight, and preparation are the true currency of the future.